All the links you need to join my chat or take action on the course or the mentorship are here. Otherwise, click that Twitter link to private message me. Over this weekend, many people were profiting in the chat. If you want to become a student, I do offer one-to-one mentorship or have a course for anyone that doesn't have too much time. If you just want to be part of the chat, all the links that you need are found in the description and comment section below. So you can either just become a member and join the chat or actually take action and become a student. Let's get on with Pepe. Pepe over the last week actually did come all the way back up to this inverse head and shoulders neckline, something that we were saying on the channel for the last few weeks in the Pepe updates, as well as over on my Twitter. So make sure you're following me there, and you can find my Twitter over here, Louis_crypto. I think the Pepe trade or the Pepe inverse head and shoulders, here we go. So on the 15th of May, we were talking about this potential inverse head and shoulders, but understand that while you are beneath this is acting as our resistance. So any pumps to it, we should actually expect rejections, because this at the moment is acting as our top. And then when we come back over to Pepe, we see that with that pump, although amazing, we can see that this actual 4-hour candle started from just down here at about 15,781, and we continued up 24% to the price of 19,473. I'm basically just reading it out without the zeros, essentially, guys. Can you see this white line over here? I did think there was a little bit of a drawing, you know, maybe with my drawing tool. I did believe that could it. Wait, where is the drawing tool? Oh my goodness, here we go. Yeah, I thought this was like a little thing with my brush, but actually it's the 200 EMA. This has just appeared for the very first time in the last, well, literally in this four-hour period. So the last 4-hour period was the 200th candle, 200th 4-hour candle on the Pepe MEXC chart. And it's now appeared for the very first time. This is signaling that price is actually in an uptrend, although we can see with the immediate short-term moving averages, the 12, the 20 and the 55 being underneath, that signals that we are in a downtrend. We can see to the left, price is still holding the previous all-time high as support, so previous resistance has turned into support. But we can also see over here, this is like our last build up of candles, and we can see that's in line with that red candle. So I'm just going to draw this area, and we can see that the 200 EMA is sitting here. So if we were ever to come back down to this area, the 200 EMA states that the uptrend, actually, even if we come down to that price, uptrend should continue from this point onwards like this, because in actual fact, guys, the 200 EMA is just a trend decider. So while above any dumps, we should be looking for pumps from this location, or any dumps, we should be looking for buy signals as we are above this. But in the immediate short term, as we're beneath those other moving averages, price should come down. Okay, we are holding this key area of resistance to the left as support, so we are holding a higher level. Of course, you can come below. Even if you come into this next green area between this price point and the 200, you'd still be above this low, so that would still be a higher low. Although yes, this would be your resistance, as we can see over here, and as stated in the last previous Pepe update, as well as on Twitter. We just need to make sure, yeah, even if this is lost, we're not losing this low. Okay, so what I will do for you guys, I'm going to measure from this low to that high point, and it's going to give us a golden pocket over here. The 0.5 fib has been retested already, but when we actually pumped from this location, we failed to break the high. So again, still resistance. This is also resistance. We rejected that price point. I'm going to actually use some new fibs from the high over here to the low, and we can see that we actually rejected that 786 fib, and the closes were beneath the golden pocket over here, signaling for downtrend continuation. We see that we lost the EMAs in the process, signaling for downtrend continuation. The only thing holding us up at the moment is Pepe's previous all-time high over here. Let me know in the comment section below what you personally think. I hope to see more of you joining, either as a member or as a student. Check out those links, all found in the description and pinned comment section down below. I've got some discounts at the moment on the mentorship and the course, so if you want to take action, please do. The mentorship will only have 2 slots available, so once they're gone, I won't be able to teach anyone a one-to-one for a while. But there's 2 options. You can either take a half plan, which is 5 hours of my help, or a whole plan, which is 10 hours of my help, which we'll try to finish in 3 to 4 months. You're also going to get my Discord chat for free for the first 3 months, and then after that you can decide whether you want to stay on or not at at 50% discounted rate. Thank you guys for tuning in today. Please do remember that although we're beneath the shorter term moving averages signaling for downside, we're still holding this previous all-time high support. Even if it's lost, we can see that the 200 EMA is sitting here. and I do believe that this area would be a great place for longs or buys with stop loss beneath this, as this would be the invalidation point of any further buy signals. Again, this is still acting as resistance, so we need to go ahead and break this if we want to return back to the previous all-time high and looking for higher price targets. This move over here on the breakout, depends where we do breakout, would be around a 100% move. Thank you guys so much for tuning in. Like, subscribe, and comment. Hope to see more of you in the community as a student or as a member. All the links you can find are down in the description or pinned comment section below. Cheers.